the NQ moves faster than the ES and further, but it also is twice the cost to enter a contract. So if you think about it like this, when you're entering a trade on NQ on NinjaTrader, it's $1,000 to enter a contract. When you enter a trade on ES on NinjaTrader, it's only 500 bucks. And basically that means you can trade 2 ES contracts for the same cost of 1 NQ contract. And an ES tick is worth $12.50. So if you're trading 2 contracts, each tick is going to be worth $25. On the NQ, each tick is going to be worth $5 on 1 contract. The NQ typically doesn't move 5 times more or faster in the same movement than the ES. It's not typically 5 times. Maybe it's 4 times, something like that. It's not typically 5. So on the ES, if you're trading that way with an equal position size in terms of margins, it actually only requires a few ticks of movement for you to make a huge gain on the ES, whereas on the NQ you need it to move a lot further. Just keep that in mind. There's a lot more consistency on the ES because it has more volume. Prop firms will allow you to completely over leverage yourself. So what prop firms will do is they'll allow you to trade the equal amount of contracts of NQ and ES, but no cash account would ever allow that, right? So when it comes to like NinjaTrader, for example, like I trade on a NinjaTrader cash account, and that's my main account, is a NinjaTrader cash account. And so when I'm trading on NinjaTrader, the way it works is if I enter a trade on the ES, it's $500 to just enter a trade with an ES contract. That means that I probably need at least $1,000 in my account to cover my margin. You know, you probably need really more than that. But it's really like, to be relatively safe, you need to have $1,000 or more per ES contract. Well, NQ is $1,000 just to enter a trade with an NQ contract on NinjaTrader. So you really need $2,000 or more to enter 1 NQ contract. So technically, like if you're trading, let's say you have a $10,000 account on NinjaTrader, like on an actual cash account, you can trade 5 ES you can trade like 10 ES contracts on that if you really wanted to. But you could only trade 5 NQ contracts, and you would be pretty much maxed out at where you could be, because you might still get liquidated if it gets close to your position levels. So, I mean, realistically, let's say you have, let's just make the numbers a little easier. Let's say you have like $12,000 in your account. You're pretty much safe to trade 10 ES contracts or 5 NQ contracts. Now, on a prop firm, they won't delineate. So they'll allow you to trade with the same number of NQ contracts, but like that's super, super risky. And you would never do that on a cash account. And that's one of the things that I always criticize about prop firms. They don't treat the accounts the same way that it's treated in an actual cash account. And so I just think that they allow you to over leverage yourself. Like, to me, it's crazy. It's crazy that you can trade an account with 10 NQ contracts that only has like a $2,000 or $2,500 drawdown limit. That is insane to me that these prop firms will even allow you to do that. Because basically $2,500 in drawdown on NQ and 10 contracts can happen in like 2 seconds. Like, that is bonkers that they even allow that behavior. So just bear that stuff in mind. A lot of these prop firms don't educate people on this, and that's like why I try to do this. Like, I try to tell people, like, think of your prop firm account the same way that a cash account would actually work, and that will change the way that you look at the ES versus the NQ completely. In general, what type of setups am I looking for? All right, so here's what I do. This is generally the way I approach things. The first thing I always do is I go like this in the morning, and I look at my price action for the overnight, and I go, okay, based on the overnight price action, what do we kind of have from the big swings overnight? And for me, it was a high and a low, and it looked like we were in the middle of it. So it looked like we're probably going to have a range. So I start the day by assessing the overall context of the day. And that context can change sometimes. You can have a day that starts as a range and turns into a trend or whatever. But overall, I look at the context. And so today I went, okay, we have a range day to start. There's a big range. So I'm starting with the assumption that we have a range day. So that's the first thing. After I figure out if we have a range day or a trend day, I then draw my short-term trend lines and I see what has played out and what hasn't. So in this case, I mentioned this earlier, uptrend had played out, downtrend had played out. So everything was new from this moment here. We had an uptrend, close outside new high, that played out. We're in the middle of the range, right here's the midline, right here. We're in the middle of the range and it's a range day. So then what I do is I start drawing my short-term trend lines, like we had this little channel, and I start playing the rules of the price action based on what kind of day we're having. So a range day, I'm looking for triple tests. I'm looking for failed breakouts. I'm looking for trades at the extremes. And then I'm also going to look at trades within trends that are within the range and also trades after the short-term trends have played out. So hopefully that makes sense. And that's what I'm looking at. And that's what all these are. This was technically like a failed breakout at an extreme. This was a failed breakout at an extreme. This was a lower high after a test of an extreme. This was a second entry in the middle. So these are both dicey. These are the two dicey trades. This was another sort of triple test and second entry short at an extreme. That was a previous range high kind of area. This was just a failed breakout up here. Another failed breakout, but no trade there. This was a triple test of a key area. Another extreme. This blue line had come into play a lot as a range. So it's just a range day. There wasn't really any inside of trend like trades today. Whereas like the other day, like if we look at this day right here, this is Friday. So if we like took Friday, for example, there was all these little channels on Friday that you could draw. Like here's an example. You had this kind of spike in channel right here. And on Friday, because it was a downtrend day and we were within a down channel here, you could look for different types of stuff. So like this is one where you get a first entry, second entry short, lower high. I actually took this trade on Friday right here, this short right here below this bar. And that's a nice trade. That's a second entry within a trend. So it's what I look for in the price action and my setups, it does vary based on what type of day we have and what the overall context is of the larger price action movement that we're in. So I hope that helps. I personally try to only take between 1 and 4 trades a day. I don't like to take a bunch of trades, even though there's a lot more setups than 1 to 4 a day. But I look for 1 to 4 setups in the first like couple hours of the session, and that's how I do it. But there's a lot more opportunities than that do exist each day. No, I don't wait 5 to 10 minutes. I just trade what I see, and I don't worry too much about it. But you do have to be aware that like there is a volatility spike sometimes. So you do have to be careful. You asked if you have a smaller channel with a wider one, which one do I prioritize? I prioritize the short-term channel first. I always prioritize the most recent price action. So typically that's going to be a short-term channel. The wider channel is usually the longer-term price action. So I focus on the short term first. Do I only use the 2000 tick chart? Yes, I only use the 2000 tick chart. I don't use any sort of multi-time frame 1000, 2000 confirmation thing. I don't do anything like that. I just use the 1000 or the 2000 tick chart. That's it. I used to use a higher time frame tick chart as well. So I used to use a 10,000. And what I used to do was I would look at the 10,000 for extra confirmation. But I just found that it wasn't really helping me. And if anything, it was just distracting me a little bit. So I find that just using the 2000 tick chart works great for me. I don't really need anything else because like, think about it like this, right? If you're in a big trend, the higher time frame can be nice for showing you that the trend is still in play on the higher time frame. And then like it just, that's kind of a cool thing. But like overall, I can just draw my trend lines here, and it's like on a higher time frame there might just be like 2 candles there instead of this many. But it doesn't really matter to me. I don't know. It just doesn't help me. It doesn't help me using other time frames. I find that understanding the context of what's happening within this time frame works. If you go lower than 2000, you start to get a lot more false signals a lot of the time. That's my experience at least. Just like if you were scalping a 1-minute chart and then you start going, you know what, I'm going to scalp a 10-second chart. You're probably going to have a lot more false signals if you do that. So that's at least been my experience with it in general. When I have a clear trend, do I only take scalps in the trend direction? Yeah. Yes. The only caveat to that is something like this. Let me see if I have one today. The only caveat would be maybe like something like this. We are making lower highs and lower lows here, so we have a downtrend. But when we formed a new short-term uptrend, so there's a long there. So you can go long. You can trade both ways, but like, let's say for example, you end up with one of these where you have like a big downtrend like this and it just keeps going. I'm not looking for longs. The only time I'm going to look for a long is after we get a close outside, new low, and then we confirm some sort of reversal pattern. That's it. I'm not really looking to go against the trend when we have an established one. But today's a range day, so you can trade it in both directions, depending on where you're at. When you have a relatively flat channel, you can trade it kind of like a range. However, I'll say that like you don't necessarily want to do like, it's kind of like this, like if you have a flat channel, sort of like this one, where it's not very strong or even flatter, you don't really want to play like a triple test off the high or whatever. You just want to, like, you still want to play a triple test as like a horizontal, like this. So like if you have a triple test from the highs of the channel, you can usually take a short if it's far enough away from everything. So a lot of times if you do have like a flat channel like this, you might take shorts, but they're going to be more like, they're usually going to be like a short-term trend within a channel that gets a close outside and a lower high, stuff like that. So similar to a range, but you're not really gonna look for as many like triple tests from the opposite side. Now, if it's an up channel like this, you might look for a triple test off the lows to go long, because you're really favoring longs in an up channel, or if it's a flat down channel, you're favoring shorts. So just keep that in mind. Like you're not really gonna trade like a failed breakout or a triple test that often even in a flat channel like you would in a range. But what you can do is trade short-term trend lines playing out. Go!